Let's start, first of all, with a broad macro question. Is a 50-year mortgage good for the housing market?
The administration's very admirable in trying to help the housing market, but at this point in time, getting a 50-year amortization loan wouldn't benefit the housing market too much. If mortgage rates just head down towards 6% like it has recently and just stays here for a longer period of time, the 30-year fix is perfectly fine just to get sales to grow just a little bit.
What types of ripple effects, Logan, could we see if, hypothetically, a 50-year or even longer mortgage comes to market? What kinds of disruptions could it have on things like pricing, supply-demand dynamics, mobility, and everything else?
I don't believe it'll change things too much because you're probably going to get a much higher rate for the 50-year than a 30-year. You might get initially some savings, but the lack of equity build out and it's just not what the market needs. The market can function perfectly fine with the 30-year fixed, but it does require mortgage rates just to stay in the low sixes to get any kind of traction. In the past few years, we get a little bit of traction going. Fed gets hawkish, mortgage rates go up 1%, and then it kind of kills the demand. But we have to also be realistic here. We've had near 5 million total home sales for, every year since 2023. So we're okay. A 50-year amortization is not the solution at this current point.
What's the most important thing for the housing market? You alluded to rates. If that is the case, does the Fed need to embark on not just a rate cut in December, but a longer rate campaign lower for the coming months and years?
Getting the Fed to become a little bit more dovish requires the labor market to really break. So we have to be realistic that, low sixes, high fives might be the best rate scenario. It is a positive that active inventory has grown in the last few years. Price growth slowing down, wage growth growing, households being formed. There's a lot of equity out there anyway. Those are the best things for housing because over time, history has shown us that tends to work out. Of course, the builders are at new 2019 sale levels. They're in the sub 6% mortgage market world. But this Federal Reserve does not want to kind of take to that level unless the labor market breaks. But near 6% can get things moving again.